Another up year for 2024, and this video is designed to unpack what happened in 24 and some of the projections of what we are going to see or expect to see in 25. So let's go ahead and unpack this video today. Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38, and we always kind of talk about inventory, but we're going to ignore that today. We are going to look at 2024. So what really happened in 2024? Well, in the beginning of the year, we started with very high buyer activity. So we started to see appreciations. In fact, we saw 15% appreciation the first 4 to 5 months here in the Bay Area. Well, inventory then increased. We started to see buyer activity drop down because the interest rates started to peak yet again. And then we started to see that retraction in value go up from about June to September. And then from September on, we had a flat line to end the year with about 7 to 8% up. Now, if you guys want to go back and watch my video that I did January of 24, I said projections of we're going to see 5 to 7%, and we were in that line, 5 to 7% appreciation. We had a lot of pent-up demand. We had buyers that wanted to enter, they didn't enter. In September, we saw the lowest rates in the market, which was 5.75 on the jumbo. This is an ARM product. A lot of buyers did enter. They pushed up that activity. That's why we ended up with the remainder of the year flat when we saw a drop from June down to September. We gave back 6 to 7% in some cases. So what does this all mean? We have a new president. We have all these fires that are happening in LA. We have so many changes that are happening, but yet the stock market continues to go up. How is this going to play its part in terms of here's 24, here's about 4 million homes sold. Mind you, in America, we sell about 5 million homes every year. These are resale, has nothing to do with new construction. Well, in 23, we sold 3.8 million. In 24, we sold 4 million. So we're going to go into projections of where we see 2025. But we'll start with this chart here. And this is the projections of the mortgage rates. Well, if you look at Fannie Mae, they're projecting that we are going to be in the low to mid sixes. Mortgage Banker Association, about the same thing, slightly higher than Fannie Mae. And Wells Fargo is definitely in line with Fannie Mae and MBA as well. So average, we're going to see first quarter about 6.6. This is, by the way, 30-year fixed. Then we are going to see 6.45 in the second quarter, 6.3 and 6.3 for the third and the fourth quarter. So what does that really mean? Well, it means it's about the same interest rates that we saw in 24. We are yet again going to see in 25. So are we going to see the fives? I don't think so. There's no evidence to that. Remember the 10-year Treasury. The 10-year Treasury is about 4.5%. There's a spread of another 1.75 to 2%. That makes the mortgage rates of where it's at today. So there may be new policies taking place, and that may affect the interest rates in a positive manner. But 10-year Treasury is kind of controlled by the job market, inflation, and other economic news. So we think it's going to stay where it's at. So interest rates, definitely 6.25, going about average for 2025. Well, at the same time, when we look at the inventory, before we go into the home projections, I actually have that as well. I think inventory for 2025, we are going to see 15 to 20% higher. Now, mind you, we went from selling 6 million homes in 21, and gradually we dropped down to 3.8 in 23. And we sold 4 million last year. I think we're going to sell 4.2 million homes this year. I think more sellers are going to partake. We're already seeing this data. Comparing, because I personally collect San Jose's data. I've been collecting it for 10 years and just kind of watching the active to the pending column. And the active column is about 22% higher than January 1st of 24. And today, as I'm recording this, it's the third week of January, and I could already yet again see about 20 to 22% higher in inventory. I think that's going to keep the prices from increasing as much as we saw in the past couple of years. Mind you, we saw 10% appreciation in 23. We saw yet again 7 to 8% appreciation in 24. So as we look through this to say, okay, what is this year going to resemble? 2019. We're going to see 2 to 3 months worth of inventory, meaning we have 2 to 3 amount of actives in comparison to pending. So that's called an absorption rate. Now, when we look at this chart right here, it's going to show some of the projections by the different organizations for where the prices are going to go. Mind you, this is America, right? This is America average home prices, and I'm going to give you my opinion for the Bay Area based on the data that we're collecting. So the average here is 2.6% for all of America, but Goldman Sachs is 4.4%, Wells Fargo says 4.3%, Fannie Mae 3.6%, and of course drop to where Mortgage Bankers Association 2.7%, Zelman and Associate, they collect new construction data 2.3%, NAR, National Association of Realtor 1.8%, and then Freddie Mac a little bit less than 1%, average 2.6%. Those are American numbers. Now, I think we are going to see 3 to 5% appreciation for Bay Area pricing in 2025. The reason being is because we have a pent-up demand of buyers, specifically the move-up buyers, the ones that have an 11, 12, 1,300 square foot home. We're seeing a lot of that coming forth to say, I've waited long enough because I had this amazing interest rate. I think I'm ready to move to a larger place or better schools or closer to work or whatever the case may be. Millennials are getting older than 32. And I'm talking about like majority of them. So age of entry into the real estate market is 32. Well, on average, they're about 34, 35, and 36, and they haven't bought their first home yet. Well, the interesting part is that the stock market, their portfolio, I'm talking about Bay Area profile buyer, that's intact with RSUs. The stock market has been elevating. Their bank account is looking really, really healthy, but yet they are still renters. They are going to enter the real estate market. However, the trigger that it's not going to be interest rate. It's going to be inventory. They are going to see, oh my gosh, I see my dream home. I'm ready to move. I think that's going to be the trigger for 25. It's not going to be the excitement of the interest rate because the monthly mortgage payment, the taxes, and the insurance, with all the fires that's happening, it's going to keep the buyers on the fence. I think inventory is going to bring the buyer and actually execute to buy their first home. So if you're thinking about selling and you want to execute on the best months, give us a call. We'll share more information because we have that local data. And if you're thinking about buying and you don't know where to start, you know what? Give us 6 months in advance. Let us show you enough information so you don't have to do the research on your own, and we'll give you all that information. And when you're ready to get your home, we'll be there with you. So feel free to reach out. 408-515-1613. Until then, bye-bye.